So in this lesson and the next lesson, we want to talk about how we go about expensing the cost of assets that have a useful life beyond 1 year. And those are primarily fixed assets. But if we look at the whole full range of all the assets that have useful lives beyond 1 year, we can probably take a look at 3 main categories of assets if we want to look at the entire landscape of long-term assets. If we have long-term assets that we want to expense over time, over their useful life, we have tangible assets. And tangible assets are physical assets. I can physically touch them and see them. Things like transportation vehicles like cars, machines. I'm going to abbreviate building here. That's building, equipment, facilities, plant facilities, factories, things like that. Those are real physical hard assets that we build and we use to generate revenues in the business. We can also have assets that are not physical. Intangible assets you can't touch them and see them, and they're not physical. But to some companies, there are some very valuable intangible assets. For example, patents and trademarks are intangible assets that have value to companies. The music industry has things called copyrights. So, for example, pharmaceutical companies invest a lot of money and they have a new drug and they'll have a patent to protect that asset. That patent has value to them. That's an intangible asset. The Coca-Cola drink is a trademark. The brand name Coca-Cola, I think they had someone come in and do a valuation of the brand name to Coca-Cola. It was worth $1 billion to Coca-Cola. That brand name trademark was $1 billion. So they have lawyers and they aggressively protect these intangible assets, just like copyrights in the music industry are for books. Copyrights have value to people. So these have long-term value, so we're going to expense these over time just like we do the tangible stuff. So some companies have a lot of very valuable intangible assets. Then there's a third oddball that is unique to the extraction industries, and it's mineral assets, and that can be things like gold, copper, coal. Oil and gas is probably the biggest. I worked in the oil and gas industry for 5 years in Houston, Texas. So the natural gas and the oil reserves that we had in the ground, all that gas and oil that we drilled for and we developed and had in the ground stored, was a very valuable asset to the company. That generates a lot of income to the company. So we want to allocate all the cost to develop and extract these minerals. We would expense those costs over time as we remove these resources from the ground. So these are the 3 big categories of long-term assets that you will run into across all industries, all companies, that you want to expense over time. We'll start with a real simple example on tangible assets, and then we'll go through the methods of depreciation in the next lesson. But just to kind of get started on this, is if we just take a building, which is a simple example. Let's say we have a building, which is a physical, tangible asset, and the total cost to place the asset in service. So that means basically all the costs to build, put the electrical, do everything, inspect it. They do a final walkthrough. They go through an engineering punch list, which is the final thing to fix everything in the building and make sure it's really occupational ready. Like, for for example, they may walk through and they see a crack in one of the windows, so they'll replace that window before they can declare it operational. So once they get past the punch list, they go through the inspections, they declare and certify the building operational on, let's say, July 1st, 2014. And we will determine that the useful life of the asset, the building, is 10 years. 10 years. And at the end of 10 years, some of these assets have some value to them. That's referred to as residual or salvage value. Salvage value. So we may have some salvage value involved. And let's keep this real simple to make this extremely simple. Let's say at the end of 10 years, we can get $20,000 for the building. So what we're going to depreciate, tangible assets are depreciated. What we're going to depreciate for tangible assets, in this case, the building, is $100,000. Okay? So when you go out there and you figure out what do I need to depreciate for tangible assets, you have to know total cost to place the asset in service, $120,000. When did you place the asset in service? Then you got to know what the useful life is. And the fourth thing you better know is there some type of salvage or useful value to the asset at the end of its useful life? And then once you know these four things, then this amount of money is what you're going to depreciate for this asset. And in the year 2014, if we did a straight line method of depreciation, which means $100,000 divided by 10 years is $10,000 a year, and it was placed, and let's say we're on a calendar 12-month basis, and we placed it into service in the middle of the year, which is 6 months, then the amount of depreciation expense for the first year will be $5,000 for the building under the straight line method of depreciation. We'll cover these different methods of depreciation in the next lesson. One other point I'll make about this, let's say after 5 years, or let's say in the year 19, we spend another $10,000 on the building to re-roof it and repair it and recondition the building, and that prolongs the life of the building another 5 years. This amount of money will be added back into this depreciable basis. So now we started with $100,000, now we have $110,000 that becomes part of our depreciable basis, and it's been extended from 10 to 15 years, but we've already gone through several years from 2014 to 2019. But just realize when you have what's called capital improvements are improvements to existing assets that may extend their useful life. That also comes into play when you depreciate tangible fixed assets. So we will depreciate tangible fixed assets. We'll cover the depreciation methods. Intangible assets are amortized. Depreciation expense, amortization expense, depletion expense. So that covers the three types of capitalization expenses for the three main categories of long-term assets. This is the dominant one that you'll probably see. If you work for pharmaceutical companies or the music industry, you may amortize. That means you'll just take, and most of the intangible assets are used under a straight line method. They just equally allocate the cost of the copyright, the patent, over its useful life. And the useful life of these can be quite long, much longer than the tangible assets. It's not unusual to see 30 to 40 years for intangible assets. Mineral assets can also be extremely long. In the oil and gas industry, they'll figure out all of the costs to develop and extract the resources, and they'll use units such as MCF is used for natural gas. They might have 1 billion MCF in the ground, and they have so much in developmental cost, and they'll divide this 1 billion units into all the development costs. Let's say it's $10 million, and they'll have a unit cost to deplete. And as they remove, let's say, 1,000 MCF from the ground, they'll take that 1,000 MCF times that unit depletion rate, and they'll deplete that. They'll do what's called depletion expense against the minerals. If you work in an extraction industry, you will see that. If you work in the music or a pharmaceutical company or certain kinds of companies like Coca-Cola, you'll see this. But a lot of companies are definitely going to have vehicles, machine equipment, and buildings. So this is the most dominant one. But this covers the full landscape of how you would capitalize or expense the cost of these 3 main types of long-term assets. And we'll cover the 3 different methods of depreciation in the next lesson.